What's up, guys? This is Ryan here, and I want to walk you through Credit Karma and how helpful of a tool this really is as a free app from the palm of your hand, so you can constantly monitor your credit score. You can always know exactly what's going on with all the credit factors that make up and determine what your credit score is. So I have a different version. I have a beta version for a new Credit Karma, that's coming out. But as you can see, this is mine. Credit Karma is great because it gives you all the different things: credit, accounts, cards, loans, auto, housing. There's all these different things in there. As you can see, my credit scores are reflecting excellent currently. Scores can drop or they can jump up very quickly, guys. Currently, my scores are excellent. They were even higher than this, but I recently bought a house, got a couple new credit cards to go with the house. There's some things on here that have caused my score to drop, but we're gonna dive into that. What I really wanna show you is just how simple it is. Credit card use, 6%. That's probably the most important thing you wanna look at when it comes to your credit score. Total balance is decreased. That's influencing, or it's telling me what's influencing my scores. It tells you what you could save on. It's all this information that's absolutely free, and it's right at your fingertips, guys. So what I want to do is I'm going to go back in here real quickly, and I want to tell you the most important part about Credit Karma and the managing your scores, so that you can build, boost, and manage your scores right from the palm of your hand by using your phone. Free tools, free technology. That's what I'm all about, guys. So first, let's look at this here. My TransUnion score is 757. My Equifax score is a 759. We'll go into this real quickly. As you can see, it indicates where your scores stand, and it indicates what's a good score, what's an excellent score, what's a fair score, what's a poor score, and what's a score that needs a lot of work. If you look here, you're going to see the 3-month credit history. Now, 3 months ago, I bought a house. Now, of course, things take place a little while thereafterwards. So after buying the house, my score dropped a little bit. Why? Well, because I had 4 new inquiries, which we're going to talk about later. I had the 2 inquiries for the mortgage, which 2 inquiries from one, or it was 2 different banks, but it counts as 1 inquiry for a mortgage. I got 2 new credit cards. Both credit cards are going to count as a new inquiry. And then I also had Verizon. That was another inquiry as well. And we're going to talk about, you can see the inquiries there at 8. But if you look, guys, over the course of the last year, I've done a lot to manipulate my score. What I did back a year ago, when you see my score dropped tremendously, that is when I invested into credit. I spent a couple $1,000s to educate myself on how credit works, so that now I can be here showing and explaining to you guys that yes, in the course of a year, I managed to drop my score all the way down to 662. I don't know what this one says, 663. So from 662, it went as high as 770, up 54 points. But then I bought a house. Currently, it's at 757. But what you want to look at here, guys, are the credit factors. Now, I'm going to start at the bottom right, which is payment history, because payment history accounts for 35% of your score. What that means is, do you make your payments on time? That's the first thing that all banks and lending institutions are going to look at when deciding whether or not to either give you a loan or to give you credit. The second thing is credit card utilization. Credit card utilization is essentially this: how much credit do you have available to you? For an example, if you have a credit card with a $1,000 limit, your credit card utilization limit is going to reflect $1,000. I'm going to jump in real quickly. My total available credit limit is $187,000. With TransUnion, with Equifax, it's $158. I'm going to explain that in a later video. But from a credit card utilization, total available credit that's available to me, this is saying I'm using 6%. If you go to Equifax, it's going to show I'm using 8%. Again, that'll be explained later in these tutorials. But you can see that I'm maintaining low utilization, and the magic number is 9% or less. As you can see, at 6%, I'm doing a great job, which is why I have an excellent credit score today. The next thing I want to talk about is age of credit history. Revolving credit card utilization accounts for 30%. Your average age of credit history accounts for 15%. So guys, you want to look at those 3 things as the most important things with regards to your credit score. Payment history is 35%. Revolving credit card or credit card utilization is 30%. And then your average age of credit history, which basically says how long have you had credit. And it's going to explain all this when you dive into this, and we'll go again through this in a later video. But those 3 things account for 80% of your credit score. 35%, 30%, and 15%. That's 80% of your score. And what it comes down to is this, guys. You want to know how you get a 757 score, or what you need to know about getting a 750 credit score? Do you pay on time? Do you manage low balances and keep your balances low so that the lenders never look at you as a risky borrower? And do you have open accounts showing on-time history over the course of the last 2, 3, 4, 5 years? Okay, so it comes down to, do you pay on time? Do you manage your balances? And how many lines of accounts do you have that are currently open and in good standing? That is the three most important things that you need to, or they are the three most important things that you need to constantly monitor and manage to have a good credit score. Now, derogatory marks, that's going to be things like judgments, liens, if you have any bankruptcies, any collections, anything of that nature. Total accounts, it's going to reflect all accounts. It's going to include credit cards, it's going to include car notes, it's going to include student loans, anything that's going to reflect on your credit score. If you pay your rent, if you pay your utilities, today they don't reflect on your credit report. They are working on changing that. There's some new scoring models that they're trying to implement so that people can get credit for paying rent and they can get credit for paying your cell phone bill on time, but it's not quite there yet. And then obviously inquiries, these things have less of an impact, but inquiries will have a higher impact if you apply for multiple cards at the same time, or if you try to get a car, a mortgage, and a credit card all in a matter of a month. They will definitely impact your score. So each pull isn't going to dramatically affect your score, but if you're pulling multiple times for multiple different things, that will impact your score. And you're going to see, if you go to the credit factors, actually, when you look here, you're going to see Credit Karma is going to tell you when your balance is decreased. Again, I bought a house 3 months ago, so the last 3 months, fortunately or unfortunately, I've spent some money. But my balances have decreased, and because my balances are decreasing, that's indicating green to show that my score is going up because of lower balances. And balances is going to be one of the biggest things that we talk about in credit card utilization, because you're going to see how quickly, how fast they can manipulate your score simply by paying things down and having low utilization. So that's it for this, guys. We're going to now jump into payment history so I can start to explain to you what you need to know about payment history and all these other credit factors so that you too can have an excellent credit score. I'll see you in the next video, guys.